Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. I am Ryan Nauman, the market strategist here at Zephyr. I have another great show lined up for us today. M&A activity within the wealth management space remains very hot, and M&A deals remain very competitive, which has put an emphasis on making the deal-making process and transition scalable. Well, I have on the perfect guest to talk about M&A, all things M&A, in the wealth management space, and much, much more. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions. All right, let's go ahead and get started. Enough from me and bring on the star of the show. I'd like to give a very warm welcome to John Bunch. John is a CEO at Allworth Financial. John, thank you so much for coming on the show, taking time out of your very busy schedule, traveling to come on the show. It's really an honor to have you on. Can you please tell us a little bit more about yourself and Allworth Financial?
Sure, Ryan. Thank you for having me. It's a pleasure to be here. So I've been in this industry 36 years. So I've been around financial services for my entire adult life. I started when Charles Schwab was a very small company. I left in 2004, and I think at that point we had close to 20,000 employees. When I started, we had less than 1,000. Went to work for TD Waterhouse, and we quickly became TD Ameritrade. I became the president of the retail business, ran that business for Ameritrade, left in 2012 to work in the private equity space. That was the infancy of private equity investing in the REA space. Worked for Warburg Pincus, then merged that company into Financial Engines, which then ultimately we took it private to become Edelman Financial Engines. Decided I'd do something crazy. I went over to London, England, and ran the fourth largest asset manager / accounting firm in the height of COVID. So whatever you thought was a challenge here in the United States, you were in a much better place than I was in London. And then came back a couple of years ago, and I got lucky enough that out of the blue, I got a call from Scott Hansen, the founder of Allworth, and said that they were looking for a CEO. I was actually looking at starting my own company.
Okay.
Pat, for close to 12, 13 years, it was just an easy transition for me.
John, I love that. I love that story and all the different areas you've worked on or worked in the past. And we're going to touch on about private equity in the wealth management space in a little while. I think it's fascinating, especially where it was and where it's going potentially. But I love all the experiences through it all, and then just starting, with Charles Schwab and then TD, and just seeing that merger take place, and now it's huge. So it's amazing. Just I've been in the industry now for aging myself for 20 years, and it's amazing just what I've seen and how it's evolved for the better too, John.
Yeah.
For the better.
That's right.
Why? So let's go back to when you joined Allworth Financial. Why did you decide to join Allworth? You were thinking about doing your own business, going on your own, and you decided Allworth.
I recently spoke at Indiana University to a bunch of seniors about their careers and how to think about joining firms or really pacing their career. And for me, it starts with culture and vision. Do you believe in what the founders have built and where they want to see the company end up? And so for me, that was quite easy. Allworth was built at the core, has always been the client and making clients' lives better, but also is a very employee-centric firm. And for me, having the opportunity to follow a founder or set of founders who are terrific and also continue that vision and really lead an employee-driven company was the number one reason I joined Allworth.
Okay. Yeah, that's fantastic. I'm a firm believer in culture. It's one of the reasons why I went to Zephyr, started Zephyr, and they were on the shores of Lake Tahoe. It's where it's funded. I was a user of our legacy applications, went to a client conference years ago, early 2000, and I fell in love with Tahoe, fell in love with the company, the culture, and I was like, this is it. And here we are. So you're exactly right. It's so important to find a culture that you like and, sticking with it. Since joining Allworth, you've been very busy. You've been very busy in the acquisition. 13 as of yesterday at the start of this recording, which seems like a huge undertaking, John. How has your team been able to successfully complete 13 acquisitions?
We've been very lucky in a sense that 10 years ago, when Allworth really decided to get into the acquisitions business as one of the core strategies of the company, we built the infrastructure and built it right from day one. I think if you look at this industry, there are a lot of platform players or really new entries into the business that want to do acquisitions. And quite frankly, many don't understand how difficult it is. And if you really think about it, there's so much that goes into this. One, there's the cultural aspect of this. Two, there's the integration. Integrations means a lot of different things to a lot of different people. And we really focused on building out the entire platform to be a viable home for firms that want to have either continued growth or for firms where the founders want to get a succession plan in place. And so we are fully integrated, meaning we transition brands, we have a robust suite of investment products, we have an integration team that has 14 people on it that all they do is eat, sleep, and drink integrations and make sure that people are happy post integration. I think a lot of times you focus solely on the clients. I have a philosophy that you have to focus first on the employees and making sure they feel part of the Allworth team. And then ultimately, if they're happy, the clients will be happy and the transition's much easier. So I wish I could say I did it on my own. I think my family would think I'm a superstar. The reality of it is I'm like way down on the pecking list on this one. And so we've got 3 or 4 different departments that solely focus on integrations.
Yeah, it takes every one of those individuals. I'm sure I have never gone through a M&A in the wealth management space. I've talked to a lot of people that have, and it's just all the moving parts. I feel as if like the initial conversations and negotiation of value might be the easiest part, right?
A doubt, right? The financial aspect of this is not complicated. It's simply just a multiple on EBITDA or on revenue. The really challenging part of it is um, what does that new partnership look like? What's the value you create for the clients, for the employees, and for the shareholders? That's where the real magic happens. If you get that, it's an incredible strategy to have. If you get it wrong, there's a few wounds and band-aids you're going to have post those acquisitions.
Yeah, I've seen some numbers going around about valuations. They, seem lofty compared to historical markets are up high. Books of business are, have increased due to the market. Do you see valuations continuing to trend higher?
Every time I've answered that, Ryan, it's pretty much like predicting the stock market. You're usually wrong. The way I would think about it is high quality businesses that are growing organically, that have well documented procedures, investment strategies, data, will always get a premium in the marketplace.
Okay.
I do think that valuations have risen quite a bit, and you're probably at a point where firms that are not as attractive as you traditionally would think are getting valuations higher than expected. Great for them, right? If you're on the other side of that transaction,
Yeah.
that's amazing. If you're on my side of the transaction, it's still fine. It's, but I think people look at that headline number and I think are missing the bigger point, which is can you buy a firm, make it grow faster, get it fully integrated into your system? And if you think about, I buy it today, I grow it organically at 10% a year for the next 5 years, that's a great financial transaction for everyone. And so
Mhm.
while kind of the purchase price today is important, I think what's way more important is what's the value of that business 5 years from the day you purchase it?
Yeah, interesting. Real quickly, just before we move on off this valuation topic, you mentioned businesses that have good processes, documented processes, they can, ask for a higher valuation. Are there any other pieces of that puzzle that maybe a practice, if they're trying to increase their valuations, can do?
I would start with what's your strategic, niche in this marketplace? What makes you special? And
Okay.
I think a lot of firms have anchored themselves on we're a financial planning led business. It's financial planning first. Everybody says that. I think you really need to step back and ask yourself, if someone came in and asked you a very simple question, which is what makes you different than the three other firms that are down the street, you not only need to have that answer, but you need to have the proof points that back it up.
Okay, interesting. Yeah, I love it. Love that. I often get that question sometimes, and it's about, AI and client base, younger client base. I love that answer. It's a little bit different. I enjoy it. So, what are some key drivers to completing a successful acquisition? You mentioned people, all right? You've got a team, three or four different teams. Obviously, that's probably number one. Any other drivers there that you can provide?
Yeah, the for me, the number one driver is getting the employees engaged as early as possible.
Okay.
I've always had this saying, you want employees to be committed, not compliant. And if they feel like you're telling them what to do and that their voice doesn't matter, that integration possibly could go fine. If you want it to go great, you have to listen to the employees along the way. And your management team and the folks that are on the acquiring side have to be bold enough to admit that maybe their processes aren't the best and what something is being done at another firm is better and to accept that. If you get that right and you have a common set of goals and you measure it properly, you're going to have a really good integration. Where they tend to fall apart is when employees are somewhat surprised that the firm has been sold, that it's not what it's in it for them, that they don't understand what the value proposition and why it's better. And I like to talk a lot about it's the why more than the what. If people understand why we're doing this and why it's better for clients and why their future looks better as an employee 5 years from now, things will go great. You know why? And I think it really is a challenging integration.
And sometimes that why answer is a harder to, make sure you articulate it the right way, and your employees understand too and agree with it. Let me
You have
see.
to be willing to fail fast, frankly, ditch your message. So, what you and I talk about, we may think it's amazing, but if we walk into an office and we deliver that message and all we see is frowns and people are like, this isn't going to work, if we're not willing to admit maybe we didn't get the messaging right, or maybe we're not right with the strategy, what is it? What message does that send to employees? It sends that yours doesn't count, and I don't think that's the way you should run a company.
Yeah, that makes sense. You've mentioned smart scaling. Let's go back to, scaling, the importance of scaling, whether it's just a practice or, M&A activity. And you've mentioned smart scaling, which I love. Why does that matter more than just the size of the practice, size of assets under management?
When you think about smart scaling, it is all about getting expansion in the business, right? And whether it's margin expansion or advisor capacity expansion. And the simplest way to look at it is we have 40 plus locations today. If
Okay.
every location was doing things differently, you could argue I have scale. I have 40 locations. It would be hard to argue you have smart scale because you're going to have 40 different policies, 40 different procedures, for ways of doing business. And I like to think about it as the Allworth way, which first translates into let's do it the right way, right? So let's make sure that what we're doing is the right way and we continue to evolve as a company. And then really hone in on where the areas that scale matters. So whether it's your client household ratio to advisors, how you can leverage your technology platform, and always look at that through the lens of the client and the advisor and get the scale piece right and be willing to push yourself. We talked about AI earlier, Ryan. I don't think AI is an evolution. I think it's a revolution headed our way. And if you
Okay.
don't understand how that's going to help you scale the business and ultimately give you either more money to invest back or increase margins, I think you're missing out on a big opportunity.
Yeah, I agree. AI, it's amazing just how quick it's, evolved and come and made accessible. I feel as if we're just at the tip of the iceberg and we're still trying to figure out how or what it looks like. Or, I think we have a good idea, but there's so many other ways I think we can use it.
If you think about it in a baseball innings analogy, we're in the first inning. The innings, the speed of change and what I've seen, even over the last couple of months, has been remarkable. And I usually tend to be on the front end of innovation. I've never seen things change this fast in my 30 years of doing it, or being in this business. So I'm very bullish on where we're headed with artificial intelligence.
Yeah. So my after this, John, I'm going to use AI for production
Yeah.
of this episode. So it's me. Do you think though? I think financial advisors, I don't think they're necessarily concerned about losing their job. I think that's overdone. I think it's more about how can we use AI to make ourselves better, make our practices better. But do you think it's moving so fast that it's just hard for financial advisors to keep up with it and just harness the power because it is going so fast? Like, Nick, tomorrow we wake up and there's some new use case.
That's a great question, Ryan. Advisors, by nature of this industry, are very smart. Where I think advisors may be a little bit blind is that the skill set that's going to be successful 5 years from today is radically different from today. If you just believe what you can put in chat gpt today from a data perspective, financial planning, et cetera, I have a belief that starts to level the playing field on what I would call knowledge. So
Okay.
then the skill set shifts from knowledge to adoption of that knowledge and your ability to communicate it, the ability to coach, the ability to persuade people to make decisions. I heard something years ago that Americans spend more time planning their vacation than they do planning their retirement. It's probably true. And
Yeah.
at the same time, procrastination is also a big challenge, right? I should do that, but I've got to go take my kids to soccer practice. I've got a pretty demanding job. So I think that skill set evolution is probably the piece they're missing the most because the jobs aren't going away. But sets in order to be successful, I think will change fairly dramatically.
Yeah, that's interesting. I like that part about, AI just kind of leveling the playing field, assuming everyone's using it. I often talk about the markets and, data being more available makes it harder to capture alpha, right? And investing. But I guess the same can be said about separating yourself from your competitors because y'all have AI at your fingertips, data. How are you going to distinguish yourself from your competitors when data is
Ryan,
more readily available?
yeah, Ryan, I think there's another really important part. And I just read an email before I came on your podcast. Clients are going to use AI more than you will.
Oh,
And
yeah.
so we just had a prospect that listened to one of our webinars and actually engaged with one of our advisors. And she ran a chat GPT on us and some of our competitors and asked a series of prompting questions and decided that our firm in these three categories ranked better than what the other firm she was looking at and decided to go with Allworth. And that was a big eye opener for me, which is we always have such an internal look at the world, which is we're going to use it for cash flow analysis, whatever investments, whatever. We better be eyes wide open that consumers are going to use it to judge us and to judge products and services and do it 10 times faster than they ever could in the past. You probably have more accuracy. So I think it's a double-edged sword here, which is it's an internal tool, but I think you have to be really eyes wide open on what's going to happen externally.
Yeah, you're exactly right. And I watched a presentation about it. And for financial advisor, I've actually done it with a webinar and with Zephyr, put a prompt in and saying, I'm looking for a financial advisor who specializes in this area. And a financial advisor should be doing that for their own practice to see are they listed in that output from chat GDP, and if not, why? Like now, like, SEO is evolving, John. Now we're, you know, how do you get that be on that list? Because that's how people are going to start searching.
Takes you back to the whole concept of mergers and acquisitions. If you're a firm today and you're successful, but you're smaller, are you going to have the capabilities and capital and just time in order to compete with all of these new changes? We used to talk about compliance and compliance rules and investing. I think this is the next frontier. And if you believe that clients will listen to what you say or I say about financial advice or investments and not then go to ChatGPT and check if you're right and check about the alternatives, I think again, you're a bit blind to what's going to be right in front of you. So I do think it's going to help consolidation. I think it will end up in a situation where we have bigger firms and boutique firms. And I think we're still in the early ages of M&A.
Yeah, let's talk about speed. And I think AI plays a big role in this. But I mentioned how competitive M&A environment is. So it kind of puts an emphasis on speed, but also culture. And how do you balance those two when you're dealing with M&A? It kind of seems like tough to balance culture with speed to get something done. AI probably plays a role in that, making it scalable.
The reality is, most financial bids for your firm are going to be in the same zip code range. They're not going to be wildly. They will be different. They'll have different
Yep.
structure, different terms. What I think is important is first understanding as a seller, what are you looking for? And that's the first thing I ask everyone when I have a management meeting with them is, what does perfect look like? Like, what do you want to accomplish? Is this a succession plan? Is this capital for you to expand on your great idea that you don't have enough of today? And to your point about speed and culture, it's not only culture, Ryan, but it is also the value proposition for the employee and for the client. And all of that to me blends into culture. And I've always said culture drives speed anyway. So if you have a culture where people are driven to be successful and want to be number one in their craft, I don't really have to worry about speed. I have to worry about processes and how we scale. And so I almost look at it as you build the culture to operate at the speed you want for your business, and the rest will come together.
Hmm. Fantastic. Great insight there, John. I mentioned you've gone through 13 acquisitions. I'm sure there's been a lot of lessons learned during those 13 and trying to build scalable and repeatable integration processes. What has worked well and maybe what hasn't worked well during those 13 that you've learned?
Yeah, I think the first lesson I would say is you have to know when to walk away. Because
Okay.
a M&A transaction might look great on paper. However, if it doesn't fit your business model and you're not able to integrate it, and it's going to create a series of new processes that are so different from the rest of the firm, you have to have the discipline to walk away from deals. The second one is price does matter in a sense. If you've got to be very clear internally what your cost of borrowing is, what it's going to cost you to integrate this business, the stress on your business model, those two I think are the biggest drivers that I look at, which is can we integrate them and what value does it create strategically for me? The lessons learned, if you think about if you and I did a partnership tomorrow and I bought your RA firm, there's 100 transactions we'll look at. How do you process your email? What does your CRM look like? What operations? And I think it's a bit of an art form of know what's important and urgent and know what really isn't is that matters, but it really doesn't matter in the big scheme of things. What I try to stress for the team is how important is this? And all it's easy to say everything is important, but if someone comes in my office and says, geez, this is really a stumbling block, and I boil it down and I'm like, wait a minute, this is going to cost us $13,000. We're paying multiple millions for this company. While $13,000 is a lot of money, it's not important in the scheme of the bigger picture. And so I would say that's one of the big learnings. The second one is you have to have humility here. If you don't listen to the employees of the firm that's going to be partnering with you, you're going to make huge mistakes. And I see it. I sit in offices, right? And so I'm sitting in Indianapolis in a firm we bought a few months ago, and I listened to all the conversations. I think it probably drives my management team crazy because I'm like, did you know this was happening? And they're like, no, not really. But it gives them a good perspective of what it feels like at the local level. And that's what matters to firms that are acquired is what does it feel like at the local level, not the financial gains that you're getting as a shareholder, et cetera. So I think those are probably two or three of the big ones.
Yeah, I like how you started off about really knowing when to walk away, knowing when to say no. Not really the same, but my son, 8-year old son, just loves baseball cards. He loves doing trades and all this stuff. And I tell him, Oliver, you can say no. You don't have to make the trade. And I think it's hard for people to say no. Like you said, it looks good on paper and everything, but the power of saying no, it's hard to do, but you can do it.
You're absolutely right. And I'm sure if a few of my corporate development people are listening, they're like, I'm not really John ever says no on some of these things. But what I'm trying to get across there is it's easy to fall in love with any firm, right? You can always see the positives. I think taking a step back and saying, okay, what are the things that might not be right? And are you willing to take that risk? I'm always someone that pushes the team. Tell me how you can do it. Don't tell me why we're not going to do it. And then we can have a better conversation.
Mm-hmm. Yeah, fantastic. All right, let's finish up. You mentioned in your work experience working with private equity. Let's just finish up. What role has private equity played in recent M&A activities? It's really, I'd say maybe 5 years. I could be wrong there. 5 years. You see it more and more private equity in these deals. And has it been a positive, you think? Will it continue?
Yeah, I definitely think it's been a positive. I think the access to capital has been phenomenal for both sellers and buyers. I saw a stat the other day that I think 85% of the transactions that happened in the last couple of years had some type of private equity backing behind them.
Okay.
And just think about it from a couple of different lenses. One, Lightyear Capital and Ontario Teachers Pension Plan are large shareholders in Allworth. They do M&A for a living. This is what they do in order to have great financial returns for their investors. So for me as a CEO, I'm in a perfect position because I can ask them all the questions where maybe I'm not as sure as someone else would be, and I've got a great sounding board right there in my boardroom. So I think that's positive. Access to capital has been phenomenal. And I also think it's making a better industry. I think we're seeing better products and services for clients. I think we're having more professional development opportunities for employees. The returns for the private equity firms have been really strong, which is good for the pension plans and other investors that are inside these firms. I'm a big believer that having private equity is a great vehicle for our industry. Not all private equity is created equal. I think you have to be really thoughtful about it when you're picking these types of partners. But I don't think we'd be anywhere near where we're at today if you didn't have the private equity capital
Interesting.
coming into the marketplace.
Yeah, interesting. Do you think it's going to continue to grow in popularity in the private equity deals in the future, or are we kind of peaked out, you think?
There's a lot of capital on the sidelines, and there's a
Yeah.
different types of private equity, right? So you've got, Ontario Teachers Pension Plan, which is a pension plan in Canada. You've got sovereign wealth funds. You have traditional PE firms. You have a handful of PE firms that have always been in this space, but you're seeing more and more new entrants into kind of the financial services bidding ecosystem, and I think that's going to continue. The markets go up on average, what, 8 to 10% a year. If you can get a firm to grow at 8% organically, this is a pretty darn good business to invest in.
Yeah. Yeah. And it must make people, financial advisors, optimistic about their future. We talk about AI, they're concerned about the evolution. But if private equities pushing money to this industry, they've got to like it. So you got to feel optimistic about it moving forward, too.
I've seen a lot of different cycles in this industry, from the beginning of discount brokerage to the entrance of PE into the marketplace in the 2010 range. I still think the best years of being an advisor and being an REA are in front of us. I have a daughter that's a senior at Kelly Business School in Indiana, and I keep pressing her that this is the space she should go in because this industry is going to continue to grow. And so I think the brightest days are ahead of us.
Yeah. And I completely, especially for younger advisors, as you know, we all know the generational wealth transfer is taking place. The industry's getting older. Great opportunity for younger advisors to get into the business, learn, and take over. Fantastic. John, thank you so much for coming on the show, sharing such great insight about a very important topic, timely topic that a lot of financial advisors are dealing with. Where can our audience get more information about Allworth Financial?
Where allworthfinancial.com is our website. I would urge you just to look me up on LinkedIn. Easy to find. I get lots of messages. I respond to all of them. Happy to do my perspective if you're looking to sell your firm, or if you're trying to hire a private equity firm, or frankly, you're a college student trying to get into this industry. I'm open to talking to anyone. So again, I appreciate you having me on here, Ryan. And I think it's great that we're doing podcasts on a variety of these topics. I think it's really important to get people educated.
Yep, you're exactly right. And love education. So, John, thank you. Thank you again. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other episodes on the Zephyr YouTube channel and on Spotify. Please be sure to like and subscribe to those channels and follow us on LinkedIn. Thank you very much and have a great rest of your week.